I have one. This is the last day of month of March and also a quarter. So what we'll do is we'll start with low time frame and go higher. We'll look at monthly, of course, and also look at quarterly as quarter is ending. Let's see how it looks like. We'll be able to see only Bitcoin chart because it has enough history, but no other coin is suitable for quarterly. I do check quarterly, but I think in crypto up to month makes sense. But I just get a quick look at quarterly for BTC how it is doing. But I think significant time frame for me is weekly. Monthly is too late if you ask me, and quarterly is just to get an idea what I mean. It is for overall like 14 years of 15 years of cycle. Um, Otherwise, there is no significant as far as the current bull run is concerned. Weekly matters the most. However, we'll look at all the time frames. So starting with 4 hours, focusing on the current consolidation. So last time we were here, which was the lower edge of this consolidation zone. So last week I added this orange box, which encompasses this upper bound and a lower bound, and we are expecting consolidation within this box. And as explained, sometimes it does go out, like for an example, like these instances, and changes the shape, which I indicated with this green lines. So the rectangular shape could actually expand into this kind of expanded pattern, and it happens sometimes. So, but we have to start with something, and if it deviates, then we see, okay, now it deviates. So, let's see how it shapes up, and that's how we track it. That's the way to go. Basically, the whole idea of identifying pattern is to identifying the boundary. That's the main objective. If you are able to identify the pattern correctly, then the boundary provides us the breakout point or breakdown points. That's the intention. So at this moment, this is our boundary. So we know that now this was the low and it didn't go all the way. And then this was a retest. If you look at the structure, so this is a nice leg up in between this correction, and that said this is whole entire a leg on a 4 hour starting from here 51K all the way to let's say 74K, and then retracement, and this retracement remain higher than the previous major correction within this leg. That's how I put. So that means this is deep but not deep enough, which would threaten the trend, or even it didn't even erase, or I would say negated any by any means. So um this consolidation now is actually offering us, or likely to offer us, I would say, another leg up, and that could push the price in 80K range. In fact, it could go all the way to 90 plus, right? Because 80K here, I don't think it will just stay within 80K range, but it is likely to go in 90K range. And that is important, and that is enough. So what we do here in analysis, like if you notice, like those who are with me for long enough, they are not focusing too much on resistance. They're focusing on the weakness, because that's my goal. Ultimately, what happens is, if you look at it, there are two ways to trade. I mean, when we have weekly call like this, you cannot trade on short term anyway, right? And that's not the objective. Opportunity channel never started for short term like trade. If you want short term, then you go with M Club, and you get both actually in that case, because you can change the time frame at a lower time frame and control and do intraday trading if you're interested, or even short term like a few hours of like 12 hours one day kind of, and also go longer term. So you get all the choices there. On opportunity channel, our objective is limited to swing, to focusing on swing, and the swing can be at different time frame, and our focus is weekly. But what we do is we don't just track weekly, we track all the lower time frame as well. But intention of lower time frame is to see what changes are happening to the higher time frame. So when I look at 4 hours at this moment, it doesn't mean I'm trying to judge the overall trend, long-term trend, weekly trend at 4 hours, right? That's not the intention. The reason for 4 hour trend, tracking a 4 hour like trend, is to see if there is any changes, because the changes start at lower time frame and then percolate, at a higher time frame. That's how it works. So if there is weakness, there will be weakness at, let's say, 4 hour, and then if the weakness persists, then it actually affects the 12 hours, 1 day, 2 day, 3 day, and so on, and goes higher time frame. So if the weakness continues, then that weakness goes from low time frame to higher time frame. That's what I mean. So the intention of starting with low time frame like 4 hours, sometimes 6 hours, is to see if the trend is healthy at that time frame. If it is healthy, the higher is going to be healthy. You know what I'm saying? The- and if the lower time frame, like intraday time frame, is weaker, that means it's just a sign that there is some weakness. However, not necessarily a confirmation that the high time frame is also weakening, but that gives us early warning. So just in case, if we sometime you might get confused that why we are tracking so many time frames, or which time frame is the good time frame. So the scope of opportunity channel has always been on a weekly time frame, or we can say, but rather than saying weekly, we can say that the cycle means the bull run, bear run, or bull trend or bear trend, whatever terminology we want to use. So like 15 16K was the potential bottom. We identified that. Before that, we had highlighted mid 64 60K. We highlighted that there is likely to be a top, and um and before that also, when if you were there like during the COVID drop also, we identified the potential bottom there. So these kind of major tops and bottoms we are trying to identify, and that's intention, because um to be honest, the money is made when one rides the uh, longer term trend. And it's not just about money, also it's about mental peace also, I believe that. Because okay, if you're free and you want to trade for a few hours, or let's say a day or two, it's a different objective altogether. And for that, the scope of opportunity was never designed. Anyway, so we are doing at 4 hour to understand what if there is any weakness at a lower time frame we want to highlight and detect. Okay, so 4 hour, this is very positive consolidation at 4 hour, right? And right now it is consolidating on a upper edge. If you zoom in fact, in this structure, this is also like a nice retest of this one, and more like a fractal of this pattern, which is in a smaller scale, and then trying to go up, right? So the low time frame risk is only if this is broken, and the higher level risk is only if the red line is broken, right, which is far away from the current level. Let's go on 1 day now and see how it looks like. On 1 day again, this looks good. The structure looks good. Absolutely no weakness. Absolutely no weakness. And that is good enough. Sometimes we complicate a lot. Um, I think rather than focusing on resistance, my objective is to focus on weakness. Like our health, as I mentioned often, if you feel today good, means there's no weakness. There's no weakness means good. So there is no. So the measure of good health is absence of bad health in a way, or absence of weakness or illness. Otherwise, there is no way to say I'm feeling good. It means there is no weakness in the physical body or mentally or emotionally, whatever. So it's more like negative measure, not negative measure, but the opposite of negative aspect. So if there is no weakness in chart, means it's good. Otherwise, there is no way it's good. And weakness is measured or quantified, I would say, in terms of what level it breaks. So if it breaks certain level, then we can say there is weakening of the weakness. And if that another level is broken, then we can say there is risk, potential risk to the trend itself. But then third level, which is the ultimate level, okay, the risk has triggered now, but what a level might break the trend, means the uptrend. There is another level which I haven't captured because there's no need at this moment. So we'll talk about that only if the risk level is triggered, when we can say there is real risk to this uptrend. Otherwise, there's no need to think about it. So reversal support would be somewhere below risk level, where we can say if that level is broken, then it would reverse, right? So we'll do that analysis only if the risk is triggered. Otherwise, there's no need. So what you're going to see that this risk level is going to go up as price goes up. And eventually, so goal is not, so eventually it might happen that this risk level might come closer to the warning level, might, okay, where, and like I'll give you an example. So in the previous one, so what happens if you look at this nature of this, so there was a potential rounding top. So let's say if the risk level is here, the price is here, and it comes down, say this is a warning level when it starts going up. And then when you see this is like consolidation, and then you see this one. So we might say that once we see this drop, this is a risk level. And then if it starts recovering, and then there is another drop and then progress, so what happened, then we move up the risk level to certain level like this one, 38K, and then goes up. And when we see this kind of a move, then it stays there, and this is where we can say that the risk is triggered because this is broken now. But we can highlight there is a potential risk somewhere nearby this region. But if somebody is expecting that somebody will highlight the top right at the this level, it is unrealistic. At the most we can say there is a, because there will be warning level somewhere here, and if that is, so that is potential risk. And then if this is a risk level, then it's kind of confirmation that there is a risk now. There can be some bounce, but then we have to see if the height is good enough, and then this is how it might pan out. So if this trend is right now going on, we have warning level somewhere. We had warning levels here. I think it was a little higher, but I should have kept here because this was the major recent correction before this one. So likewise, these levels will go up, and eventually this will break. Eventually it will break, but not necessarily at the absolute peak. But that is good enough because retrospectively, when you look at the, we didn't know that the price would touch 15K range, right? When it was 70K at this top. But if we are able to highlight risk at 40K range, 50K range, that is a big deal in my point of view. That is a big deal, 50K range. Um, so of course, highlighting somewhere near 60K range would be amazing, but that can be highlighted as a potential weakness because you need to have that kind of range, like it retraces but recovers as well. So if you have two close risk level, You can have very close risk level, but then you end up with false alarm. You end up with false trigger, you know. So in that case, so it's a fine balance. You do want that kind of false alert, or you want some kind of tolerance where you want to make sure. I would not say you want to be conservative, but I would rather look for confirmation rather than. So there are different approaches one can actually go with that. In that case, reduction, I mean, 100% in and out is never a good idea. Again, this is not financial advice, but when the there is a potential risk, one may start reducing by 10%, and then if it continues to go down, then that incremental decrease in position is a good idea, because one level cannot determine uh, that this is going to go down in a big way. Okay, so incremental decrease is a good idea. When there is a potential, let's say if warning level is broken, reduction of some amount percentage is a good idea. Reduction of, I mean, breaking below risk reduction can be substantial, and of course at a reversal level reduction can be 100%. So that time one should not be saying that, oh, I should have gotten out at 70K. I was, that is just greedy nature, I would say. Realistically, if you one could say this was the top, absolute top, yeah, if you keep on saying, you will be right. Here the thing is, so this is what Peter Schiff like people doing every other week, every other instance, they're saying it is going to go down. So of course, like if you're doing that, you are going to be right one day, but that is not prediction. That is, I would not say even analysis, because you are wrong 9 out of 10 times, or I would say 40 out of 50 times, whatever it is the ratio. In his case, he's wrong 99 times out of 100 times. And he has been doing for the stock market also. He has been saying recession, he's been saying meltdown. I'm not actually pinning him, but anyone who is like him, he's just an example because everybody knows him these days. So that's why. But people like him would keep on saying there is a top. Similarly, the extreme opposite we have seen, people who are ignorant of the weakness, ignorant of the dance, they keep on saying, buy the dip, buy the dip, buy the dip, as if you have an endless supply of money. And I mean, it's a choice, but there are people who keep on thinking that each dip is an opportunity. Uh, Probably they don't know how the cycle works. Um, and I mean, we cannot criticize them because they're acting based on their knowledge. But when you ask TA, you would see these kind of two extremes, that people who keep on saying there is a top, and then one day they could be correct, and that they could be right. Similarly, one person will say, this is the potential bottom, keep buying, keep buying. These are another extreme. What we do is we try to make a single call. But we have three levels in mind. So we say, oh, there is weakness. And then we can say, no, this is like real issue. There is a risk. And then we can say this is reversal. We did the same thing when there was a potential bottom. I said this is a potential bottom when it was here. Then FTX happened, there was another leg down. And if there was no major low, I mean, it was technically it's a new low, but it was more like somebody pushing someone off the cliff. It was like forced kind of action, not like market consensus, so to speak. It is like one actor um, kind of dominating the overall market. Exceptional case like FTX. And that's why, otherwise, this was the bottom and this was a retest. So this kind of move we would have seen from here. but this was an extra leg, and it happens. So when the market consensus is opposite to the events could actually steer or deviate the main course by some days or weeks because of another leg down or consolidation. That happens, but it just adds a delay. It doesn't add change the fate of that cycle. Anyways, it happens and we have to accept it. But then we can see that how it consolidated here and then recovered. So when you see this one, that means it is back to where it is supposed to be here. So when you see this kind of recovery in matter of few days, it took a month or so. Naturally, it takes time because there was chaos and you know, emotional and everything, and not financial chaos as well, not just emotional, but from all different point of view. This was a very tricky scenario. But technically, when you see this one, that means this particular event has no effect. The event had impact, deep impact on people who lost and all. But technically speaking, when you see this one, that means it regains this level, means this particular FTX event is kind of nullified. It has no effect on the price action. And what you see here is a confirmation that we would have probably gotten somewhere here. So this move, so you can say this whole entire cycle got shifted, right, by couple of months. We can say that. So that's the effect of FTX in terms of technical analysis. Otherwise, so of course the effect was very deep and profound in those who lost money, no doubt about it. But I'm talking about the price action. And so sometimes some unforeseen events could deviate the main course. And we see deviation and we have to adjust a bit. In my opinion, this whole entire move, if so, this I talked about the potential bottom. Actually, this was the top, and this kind of recovery, I remember that it happened because of ETF rumors. This whole entire move was driven out of ETF rumor. But anyway, then the Fed also decided to take action, and because there was no volume, if you do volume analysis, you will understand it was just going up and there was no seller, as if there was only buyers one-sided, there was no back and forth, there was no tug of war. And that's what happened. And then a major event happened, a longer term event happened, and then it brought down. So when you see retracement, you cannot confirm, because you need to have some kind of tolerance. Otherwise, if you say this was also nasty drawdown, if you look at it, because after this leg consolidation, this was unexpected. I mean, this was pretty deep, but still you can say that this was within the range. That's why we were not um in a favor of calling out a downtrend or reversal. Otherwise, if this would have gone down from here, definitely this would have killed the rally, or not good at all. And at this time we said this is a potential bottom, and then at this moment when it happened, we confirm, because that's the thing, the bottom was not here, bottom was here, confirmation point of view. But yeah, retrospectively we can say that the bottom was here. But when you are in transition like this, you cannot say this was the bottom. You can say this is likely to be bottom unless certain levels are broken. We can say it is a potential bottom, but confirmation comes when move like this is observed. So similarly, when retracement starts, you can say this is a potential top, but you have to have some kind of tolerance like this to say if this is broken, then you can say, oh, there is risk and reversal. So there is always some kind of leeway or some kind of tolerance that you have to keep. Otherwise, what happens, as I said, you end up triggering false alarm, and that is bad actually. And bad in a sense, sometimes, countries where you're paying taxes, for an example, if you sell in let's say within a year, then you might end up in short-term taxes, but which is higher than longer term, right? And so the false alarm basically could end up in loss in a way, not in terms of, let's say, sometime you re-enter, you think you re-entered, but you don't know that that profit that you have booked as part of that exit triggers the short-term gain. So that's why it's very important. So when it is very easy to call out, this is a top potential top multiple times, like people like Peter Schiff do, or even yeah, many people. I don't want to go in listing names. Um, but but you know, waiting for the right moment needs a lot of technical skill, in my opinion. Anyway, so let's come back to one day and say this is very healthy, right? Very healthy. So as I mentioned, I think it is okay to say we should see 80K, 90K range. And another factor that now PCE is out. PCE is not surprising, though there is minor increment in inflation. PCE is second method, another method other than CPI. These are two consumer related inflation measure. You can Google it, you can search up, you can use Chat GPT or any other resources to understand. Basically, I explained in one of the course, PCE and CPI, there are difference in two main areas. One is what they measure, means what all items they keep in their bucket for measurement, and second is uh, um, one the formula is different, where PCE is more dynamic, means they change the bucket. CPI is more like fixed. They have for certain items, they don't change. That's what I learned. Okay, so the Fed refers PCE more than CPI. They do refer everything, of course, but what I learned from economists over time, that the Fed's focus is PCE, and especially the core PCE. Core means non-food, non-energy, which is more which suggests the more long consistent or longer term inflation in index, because natural gas and oil price change often. Sometimes they inflate food and related prices. So they try to remove and measure the core. So if you are measuring, you focus on core PC or core CPI and see. So in recent couple of months, core CPI has gone up a little, but we cannot say it's a trend. But that's why the rates are not being cut by the Fed. That's the explanation, which is right. So they don't want to cut in anticipation that the inflation rate will improve, right? Because the inflation rate is stubborn at this moment. It's sticky, right? And it is better than last year. So year over year improvement, but it is month over month. There is slight gain in last 2 months. So if the next 2 months are also like that, then the Fed is not going to cut interest rate and going to keep the same. And if they keep the same, then the impact of the higher interest rate is likely to be observed on the assets. And it at what extent is something we have to see, right? Nobody can predict that. But at this moment, there is no immediate threat. So the recent number is not a threat by any mean. But I think that means that again another month of result or another 2 months of data mm, are critical for us to predict the cycles. Or I would say cycles is like indirectly, because the Fed, I think right now is actually driving the cycles, if you ask me. So it is very important that we understand their action. That's why we have to track these inflation numbers. Let's look at weekly, right? So now I think we don't need this arch, because we said this, it if it this circle is likely to provide the bounce and then goes up. So right now, this weekly, if I hide this, you can say this is a nice green candle. So this was a dip last week, and now this week it looks nice. So this is consolidation at all-time high range. All-time high, don't you have to don't you don't go by the exact dollar number. You have to go by little, div up little, like a percent, couple of percent, few percent higher, lower range. That's a range, a zone that you have to consider. And we can say that consolidation is happening at all-time high. When we look at monthly, you will have better idea on how it looks like at all-time high. Weekly is still not a good time frame to understand that. However, you can still see what is happening when you zoom out. So I would not say it is looking for this one at this moment, right? Um, so we can actually, if there is any way to change the style, I don't have a way to. Maybe I can make it thinner, just to indicate that it is not a probable scenario. Maybe change the color, indicating it's not likely, not like a red. Anyway. Oh, what else? So the week, this is consolidation, a nice looking trend when you look at weekly, right? So this is the range we're talking about, 80K plus. And that's where the next reaction is expected, around 90K. And that is going to be interesting, very interesting, because it's this trend line that I have depicted here, drawn here. This is very important. 80 for 80, mid 80K range, but I think it can vary a little, because you know that there's some kind of little change in angle could actually change the range. If you look at then it becomes 85. I like that. Anyways, when it comes closer, we'll have a better idea. And also, this is very tricky. When you measure from here, this spikes. And that's why these trend lines are not so reliable in terms of exact dollar numbers. If you do like this, then it changes to 90K. You see, something like that. So the angle of this line offers some kind of range. But let's take 90K range as the guide, where we see some kind of major reaction. So the major reaction, so the arch that I talked about could actually form. I'm not saying it will. Something like that we might see. Okay. And this could be like this much or this much. So I think for now, I'll just highlight that with a dashed line. Maybe grayish, just for tracking point of view. It's not obvious at this moment. Okay. So the obvious move that we are expecting um is touching the 90K, and that's where we're interested. If it can create a symmetry like this, and if it does, then we might see a major retracement. Again, even if it does, it is not an issue. The retracement could be shallow like this, and in that case, this is would be very short term, like this, and then it could continue. But I think somewhere here, the range could be much bigger than this one. That's for sure. The range could be this much or deeper, but it is unlikely to be small, in my point of view, looking at the structure at this moment. Yeah, but anyway, we are not making that as a rule at this moment. We don't want to. Okay, we want to see how it reacts there, and then we'll come to know. because there's some kind of, price action, that the way it moves also important. So this is another aspect. It's not just level, but how it moves, means the speed at which it moves and the volume and all that need to be considered for analysis, not just price, you know, and how immediate it tries to recover. That is also important. If it drops aggressively, then we also have to see that how quickly it wants to recover. If it doesn't, that means that aggressive drop has some substance, and that gives you different outcome. The level could be same, but how fast it drops, so that's the speed and the volume also tells you something more than just a drop up to certain level, right? So from a technical analysis point of view, anyways, as in when it happens, we are going to figure out. Right now it is not a scenario, so we'll keep it for the future. So this is weekly. Let's look at monthly now. So I posted monthly actually on the Discord. You must have noticed this is Coinbase. It doesn't have all the cycles, but that's fine. Um, so this was the consolidation, and when this is another consolidation, so this consolidation, there was a breakout somewhere here. So you can say that this level is more or less similar to 20K range. And then there was another leg. And now don't try to read in between the lines. Okay, means when I say that this is equivalent to 20K, that means the human brain is amazing. The moment I say this, the interpretation by the human brain is that means this leg is going to be repeated here. It is very obvious. All the brains are wired like this. If there was a downturn, let's say from here, hypothetically, and if I say we are here, the mind is going to say that means the drop is coming. This is how the mind works. So I had to clarify that when I said this is similar, simply just stop yourself there and say this is a breakout point. Don't assume that there is another leg like this coming up. Okay, you may anticipate, but don't assume. Anticipation is fine. That okay, it might, anticipation is in my interpretation is it's very natural behavior that you might see or expect, but don't assume that this is going to don't consider that is going to happen. Like, so don't accept that as a reality unless you see that happen. So you anticipation is fine. Okay, so what else? BLX has longer history now. So this leg could extend higher for sure. Why not? 100K plus. Why not? And we are going to track it because once it goes into like all-time high, you know that there is no reference point. When it is under certain high, then there are references because you have resistance. When it makes new all-time high, you need another expertise. There are different ways like Fibonacci extension and other ways people figure it out, like standard deviation and other things, but it is not that easy. When I say that not easy means there is no single formula or method which can give you that accurate number. It is very much, I think those who are able to do it, and we are part of it, that group, that we will be able to do it for sure. That we have ways to measure. Once it makes new all-time high, we have ways to measure pretty accurately the range, the next resistance and all. We have it. So other would have it, but it's not very general. Very few people have that ability as far as I have seen. So I think when you look at closing chart, this is very interesting that the closing is already higher. Remember, we people usually track highs, nothing wrong. But when you look at closing, closing has more importance than highs in my point of view. And that's why uh, some often I bring up the closing price chart. This line chart basically depicts all the closing price. It doesn't have lows and highs, right? So the line chart, each point, each point line with markers, basically each marker is end of the month price. So when you look at this, the last month ended right on the all-time high. If you look at this one, what was the price, right? 61,351 was the closing price. What was the price? 61,181. Yeah, 1,351. So slightly lower, a couple of hundred lower, right? And that's almost the all-time close. AHC, all-time close. Again, this is not very often observed or measured. ACH all sorry ATH all-time high is what people measure. ATC is not so often, but I would suggest you do because that has tremendous importance. So this is all-time close. We already got all-time close, and this is 30th of March. We can say a day, if it doesn't crash, then we can say that it has made all-time close, and that is significantly higher. This is 61K range and this is 69K range. So not just by little margin, but clear cut new all-time close is made. We can say, don't mind saying that this is like just one day left to the month end, right? So we can say that this is significant achievement. And when you measure this one, look at this month end was right at the month all-time close of 2017. Got it? So this one, so then there was a leg up in month of November, which was significantly higher, but that was a conclusion. That's why we can say this 19K of closing, which is close to 20K, let's say, was a confirmation that there is another leg up. I mean, new all-time high, a new all-time close as well. Similarly, this is new all-time close and potentially new all-time high, depends on what it does. But we are tracking close here. So this leg is equivalent to this leg, right? I hope this is clear. And that means in this cycle, then there was like 1, 2, 3, 4 months of uptrend. Again, I don't want to say that it'll be again 4 months of uptrend because it changes. It can be shorter, it can be longer. It all depends on macroeconomics, to be honest. But one thing is for sure, when I say sure means probabilistically, that there is no weakness, number one, and there is total intention of new all-time higher or higher close, right? And month over month like that, if or week over week, if we measure the way we are measuring, I don't see any point of surprises here for us. No major surprises, I believe. And I think it's a mindset one has to, it's about mindset. Sometimes whatever way we are measuring, we have to, I'm not asking you to change the way you think, but the smart people say that, okay, is there any better alternative approach to the way we should think? And think that as an alternative approach and see it makes sense and accept that as the main approach if it makes sense. So the smart people are open-minded people. Smart people are not intellectually higher in my point of view. The way I describe them as smart people are those not necessarily highly intellectual, but smart people are those who are open. They understand what is happening surrounding. If they see that I'm not highly intellectual, they try to see who is making sense and try to say, okay, now let me see, not blindly follow, but see if it makes sense and try to follow that, and then adapt to that new method and so on. So the ability to change, the ability to think differently in a trendy way is smartness. Sometimes highly intellectual people are rigid and they might end up in trouble. Smart people not necessarily are intellectual. They can piggyback on something very easily. So I distinguish smartness and intellectual qualities. Sometimes intellectual can bring ego. What I'm doing is the right thing, and that ego might prevent that person to change the mind, and that change not ability to change the mind at right time may end up in loss or missing opportunity. So intellect not necessarily end up in profit. The smartness is what. So even if I'm very confident in my TA, I have to make sure I neutralize myself, that my ego or my confidence should not override what is happening in the world. If I believe that this is what is likely to be the outcome, but if I see change in macroeconomics and impact on price action, I must reflect that in my analysis. I cannot be biased towards my analysis, which I have done even last week, or even yesterday, or even this moment. I should be open enough and I should be dynamic enough to reflect the change of the present. That's why I often say that the analysis, no matter you do it for the future or using the past trend, the presence is equally important or maybe more important, because the presence allows you to validate whether you're right or not. The presence will tell you that whatever you have decided or analyzed is in right direction or not. If one ignores the presence, he might be irrelevant. So the being relevant, you have to incorporate presence every day, every moment, or on each major event or price action. So then only one can be relevant, and that's the key. Try to be relevant is the key. Okay, I think I covered a lot of aspect. Today, whatever came to my mind, I just kept sharing. So we can clearly see that this is like going up. Let's look at quarterly now, right? Quarterly. So the quarterly chart is not so different though. It's not so different, but indicating that sometimes I compress like this. That so there's a rounding top, but let me tell you, I was in a mm, I would say group where I was thinking that this rounding top might give the top near 100K or 100K range, which is likely to be the case, but not necessarily certain thing, or you cannot confirm it. It is possible that it might accelerate, because what is happening, which I ask you as a question as well on chatter, just for healthy discussion and engaging you guys, that each and every leg is shortening. Because of that, the top is also coming closer and closer. If you look at the distance between these two tops is the highest, then this is second highest, right? Distance. Then between this top and this is even closer. Same thing. So the same thing with respect to this low and the high is almost the same. Where if you look at this low with this high, there is a gap, and this low and high. So what is happening if you study? that this next leg is likely to be, if you think that is going to be continue, if this pattern continues, then this leg will be shorter than this leg. That means that we had 4 months of next cycle, I mean uptrend. So this might give us a month, 2 month, or 3 month, not 4 month. And we don't know how much it travels in that. But if we go with this pattern, then it could stop in 100K range. And then if this rounding top is really happening, then that top is not cycle level top. Means when I say cycle, means if this is, let's say, first one, this is second one, this is the third one, let's say this is fourth, and this is the fifth one, right? If you think from that point of view, uh, then this is a life cycle, right? This is a whole entire life cycle of BTC price action. So that this particular top in this case, because we are analyzing the overall life cycle. So if this top is not a top for this cycle alone, but a top for the entire price action, and if that is the case, then you have to think, you have to forget these segments, and you have to think that this is whole entire line is single line as a single wave, and we are talking about the top for that wave at 100K range. And if that is the case, then that retracement is not just for the retracement, because all this retracement were cycle level. So this retracement was for this cycle. This retracement was for this cycle, right? This retracement was for this cycle. This retracement for this fourth one. So this retracement is not just for the fifth cycle, which could be up to this level, let's say whatever level, right? But that retracement, if at all, if this pattern is true, with a condition, remember, I'm not concluding anything, scenario point, if that is the case, then that retracement is likely to go down deeper, much deeper than this one. That means it could touch 6K, which looks absurd at this moment, which sounds absurd, and agree, it sounds absurd. But this is the case if, don't forget the if, that 100K top is not just for the cycle 5, but the life cycle. So the 6K level is for the if condition, if we are considering this pattern, and the top is for that pattern. So I hope there is no ambiguity in understanding what I'm saying. I'm not calling out doomsday. I'm not calling, but for education point of view, that if at all the retracement of cycle 5 indicates it is not just cycle 5 but life cycle, then there is going to be devastating effect in terms of price action, and the low will be very deep, as I said, not just in 5-digit figure, forget about 6-digit, but likely to be in 4-digit. Again, there is no weakness on the cycle number 5. So thinking about weakness on life cycle is out of question. But again, this is for education point of view. Since we are talking about quarterly chart, it makes sense to talk about this kind of scenario, because we cannot talk about life cycle at weekly. You talk about life cycle only when you talk about high time frame like quarterly. So since we open the chart, quarterly chart, we end up talking about this scenario. Otherwise, we never talk about this scenario, because there's no need, because there's no probability in the present. So I hope it is clear. Let's go back to DXY, and on a weekly, we'll go back to our charts and candle mode. So it wants to go up, but it's not, it's struggling. So we'll see. So reflection of BC data will come to know when the market opens, the index, the Forex market will come to know tonight from Eastern time point of view. Yeah, but UTC time point of view, early morning or midnight. And only above this level is a major threat to the cycle of crypto, in my point of view, because there is definitely inverse, but you can see that it is inversely proportional, but not like up and down point of view. This is consolidation. So BTC has uptrend, while this is not a downtrend. You cannot say this is downtrend. This is consolidation zone. I mean, any TA, even if you're not TA, you will figure out that this was the attempt, and then this was a second attempt, and in between there was price action, and similarly between this second attempt there is another attempt for price recovery. So you can say this whole entire thing is a box, you know, consolidation like this. Agree? So while this consolidation is happening, BTC is having uptrend. So this is not downtrend by any mean. You can say this is a leg down for sure, but this hasn't broken a support which we where we can say this downtrend has begun. No way. But yeah, if this is broken, then we can say it has confirmed. Again, this is, we can say this was a risk level, this was a warning level, but it hasn't broken because the uptrend started here. But the beauty is each segment is a cycle for BTC in my observation. Like this was a downtrend for BTC whole entire 2022, and it doesn't start. It started from here because while it was consolidating, if we, so let's spend little time here. So as I mentioned earlier, you may say start was here, but it is not how it works. The start was actually here. When it retested, this is consolidation, this is bounce, this is a potential beginning, not necessarily confirmation. This is breakout, retest, and this is a start. And that's where you will see that why the crypto started going down. Crypto started going down from January. Look at the chart. Not here, because you see there is tolerance. There is, the market wants to see if this bounce is real. When you see this one, they understand. So now probably if you are not convinced with my method, probably you will understand. At least you will say yes, he makes sense. I'm not saying you follow this method, but it makes sense that this is not the beginning. The beginning is this. So likewise, I said 15K, 16K was not beginning of BTC, but when it crossed the 30K, mid 30K range of what, then it's a beginning. Similarly, when it starts going down, you cannot say this is the downtrend, but if it starts breaking down, then it can say downtrend. So beginning, I mean, potential um, downtrend, a potential uptrend can be observed at the very bottom and very top respectively, but that's not confirmation. So that's why when in January, this was confirmation. That's why BTC started going down in January. So it's not one to one, each and every candle. The key levels need to be so in so when it breaks above, that's why I'm saying this consolidation is offering the push for the BTC on the higher side. But this will trigger the warning, means you have to be cautious that there is going to be something ugly. And when it goes up, it is likely to be ugly from a crypto point of view, because then we are talking about total recovery, and not just recovery, it can go insane. And who knows, it can go higher level like this. Why not? But you have to measure each and every segment. That's the right way to do. Okay, that's why DXY is important for us. This is not a threat. That's the bottom line at this moment. Let's look at dominance. The dominance is like struggling, which is good. I like it because it doesn't make sense for BTC to keep going up and dominating all the way. So I think I still believe that it should go down. I should not say. I should say there's still a probability of going down because it hasn't broken above. But yeah, I mean, at this level, we cannot confirm it. It has to break this one for us to confirm it. But at this moment, I'm just depicting this pattern. Let's see. If it breaks above this, then this pattern has to be deleted, invalidated like this, right? But for now, let's keep it. What else? 10-year yields retraced, which is good, right? So this green path right now equilibrium. We cannot say green path or red path. It's in equilibrium. It's in equilibrium at this moment. In this zone, we cannot say which side. It has to break above or lower for us to confirm. So that's why it's in balance. It's in balance means um, it has to be watched. If it breaks down, then it doesn't require to be watched. Okay. So that's it on BTC and associated data that we refer. Let's go for the alts. Oh, it has hit, APT has hit R1. So this is like preparing for new high, right? Which is good. So this is at a breakout level, very healthy. So the BSV, I mentioned that Craig lost, but the chart is not doomed. And when it touched, I said last week, don't assume this trend is broken. You know that I'm not biased towards any chain. My focus is trend, and as long as BSV does well, I'm going to keep it. Okay, no matter how you interpret it, I'm going to keep it. And trend is not broken, so I don't know. There, we don't know. There is something going on, and we might end up with some surprises. Who knows? I don't want to predict the future, but I can say that the price action is telling that the BSV is not doomed. That's it. So Doge did something which we were looking forward. That's it. This is beginning. Now, why resistance is not required? It doesn't make any sense. See, the hard work was here. Hard work was here when we depicted this, right? This job is done. This job is done. This job is done. We can remove it, remove it. This was important. This job is done. Now is floating in the air, enjoying. It is not part of this mess. So chill. No need to find out resistance. Just chill. Unless it breaks this level. So again, we'll focus on support, right? Of course, this is not a critical level now. I don't want to. I'll just keep it like this for now. But maybe along the way I'll update. Okay, let me do it. Critical level. Yeah, at least we should do that. So just, I think I'll just close my eyes because critical level is not broken. So this move is more like mid 30K of BTC. You see my point? So this is like 15K of BTC, 15K, 16K range of BTC. You know what I'm saying? Double bottom and all that retest of low. And this is like, breakout mid 30K range of BTC. And once that is done, why would you care about new low? Nobody would care about when it is approaching 40K, when BTC was approaching 40K. Did you think about new low? Of course not. So that's why I'm saying forget about resistance. Just keep, just enjoy. Otherwise, resistance sometimes I believe that added adds pressure, because that tells you that, oh man, this is going to be somewhere, something major is going to happen. So if I don't give resistance, you should thank me actually. Don't think I'm cutting corner here. You should thank me, because resistance give you some kind of pressure. Just focus. I mean, we are focusing more on BTC, but we are not ignoring alts because it has different structure. Some alts are beginning new cycles, so it is important to understand some alts are exhausted, not in terms of trend, but in terms of segment of trend. So that's why we want to understand if it is exhausted or under consolidation. The consideration is different from planning point of view, compared to the one that is beginning something new like this one. You see the difference? So that's that's how you differentiate between coins, and that's the reason why we look at different coins, right? To understand whether they are in full swing, they're stuck, they're weakened, or weakened in terms of after major move, they are weakening not from trend but weakening in terms of that move, and might start consolidation. So these are three stages, and we try to put different coins into these three stages, and that helps you in planning. That's the whole intention, right? um okay. ETH, Ethereum is consolidating, means it's resting, gathering energy and so on, whatever you want, something like this. FET is looking for higher level. So basically, you can see it's coming out of the consolidation. It was very teeny tiny for 2 weeks. This was longer. This is even longer. This is even longer. So there's another leg up. Probably after this one, it might do something for longer term. So consolidation, longer the consolidation, healthier it is, unless that consolidation ends up in breakdown. Filecoin hasn't done what Doge has done, but that's what is intended. Once Filecoin does what Doge has done, File can be said that it is same category. And as I said earlier, that many coins actually can be put into only few categories. Those coins are different by names. So this is near breakout. FTM already had that moment and it is moving up. INJ is still in this box, means it's resting like this one. This could take a couple of weeks, 2-3 weeks. Looking at its nature, it is unlikely to be going out. I mean breaking out for next 2-3 weeks. KAS is still in consolidation, so it could take time. Could take time. Link is looking for a move up, but it's consolidating on a ascending manner in a channel. Like here, it consolidating like this. It is consolidating very different way, because this leg was not high enough. So what is happening, that you have to say that this whole entire thing is consolidation. That means it is likely to move in zigzag manner, and there might be another move up, but looks like Link is moving not in a way INJ or some other coin move, where the consolidation ended up with straight upper line, a straight line, vertical line. Here we are seeing very different consolidation. This was not, so this is a poor performance in a way. Comparatively, it's not bad, but this consolidation actually should have pushed the price all the way up, but it ended up in this one. So you, when you categorize or when you compare, this is boring chart, so to speak. Matic is even more boring. We don't know whether it will change after R2 level, to be honest. We don't know yet, but this is literally boring one. So the scalability project, maybe there are other scalability, L2 project, fundamental analyst. But chart tells you that probably this L2 thing is not picking up as it used to in life. And reason could be maybe the better other L2s are better. Who knows? Maybe we should replace it. I don't know. We might replace it with some other L2 of Ethereum, because this is utter boring. Seriously, I don't know what it wants to do. It's kind of stuck in the mud. Okay. R&D is amazing. You know that. Consolidating, right? So it could take a week or looks like. But yeah, it's pretty good. Pretty good. It has momentum. Like this was the longest. This is shorter. This is even shorter. And so basically it is not stuck like what we have seen in Link for longer. It is the momentum is periodically higher and higher, which is very positive. So basically, leg up, the consolidation period is lesser and lesser. The progress is more and more. Rune is also good. But this kind of consolidation, we have to see, because if it moves up from here, then it's good. Otherwise, it may become boring one. At this moment, we cannot tag that as a boring one because it had nice leg up. But this consolidation, we'll have to, we can give a week or two max and see how it does. So I don't want to tag as a boring one at this moment. So this is really good candle. So it is, if it can generate something like this, then you can say this is something like what ING or FET or RND or like coins they have done. SOL, amazing coin. Look at that. It doesn't want to stay here longer. Amazing. So this is momentum. We can safely say that it is looking for an all-time high. TIA, I think, is looking good this week after long consolidation. Sorry, correction. But this is okay. It was not a threat. So this whole entire thing kind of a consolidation. This is a rounding top. Interesting. Same thing, rounding top. Nice rounding top. Right. But yeah, uh, there's no cycle level issue here. This is good. I think I see TIA in a path of. So this arrow makes sense. This arrow makes sense. Maybe the angle is could be like this. But that's fine. So this can be removed. We'll keep it for now. Once it move uh, surpass this one, we don't need this. For now, we'll just keep it for now. This is good. TIA, we can say TIA is now, I think, consolidating and started looking good. Okay, so that ends the explanation analysis for all the other coins that we have. I hope you find this useful. This note, I'll end the session. We saw lower time frame, high time frame for BTC, all the way to quarterly. Everything looks good. The associated data also look good. Reference data, we saw DXY is on edge, but not a threat. Similarly, the long-term yields are also similar state. So there's no immediate risk from that point of view, but it's important to keep an eye. We also saw the quarterly pattern this time. I mean, it's not something for the first time, but every quarter we should look at it. And yeah, I think I touched base on the inflation part as well. So I believe that all the essential important points. Also, yeah, Craig lost it in UK High Court. I mean, it's a confirmation, written confirmation. His assets, some assets are also being freezed by. I don't know the impact of that 6 million pound or something, but I don't know. It's very gray area, like how much he own, how much BTC he has, whether UK court can freeze that. because he was in Australia at that time and so on. So a lot of, I'm not an expert in legal things. My focus is BSV chart. Um, and I'm interested in BSV chart because it's not dead. Um, I want to keep it for a while because there is appeal that he is going to go for appeal. The Kleiman case also went on for 4 years. So this kind of legal battle go on for a long time. So in past records, he won all the cases as far as I know after appeal and all eventually. So in this case, I don't know what will be the case. I don't know. In my opinion, there were three core members: the David Kleiman, Craig Wright, and Phil Williams. eh, I don't know for sure, like everybody, but this is core Satoshi team. One has to be the main one, and we don't know. The Phil Will says he's the main one. Craig says he's the main one. Unfortunately, we don't have Dave Kleiman. He passed away. He could be the main one, and Phil and Craig could be the supporting one. Um, and that's why they know so much. When you listen to Phil, you see that he knows a lot. When you listen to Craig, you know that he knows a lot. Knowledge is there. I'm technical background, but I have non-political view. When he speaks, it makes sense technically, not technical analysis, technology point of view technically. Then Phil also makes sense. We unfortunately we don't have climate for us to tell more about it. But looking at all everything, looks like these three people were the core. Probably they had shared handle, Satoshi handle, but I don't think that. And then one of them has to be the leader. Even there is a core team, there is always one driver, I believe. But we cannot say for sure that Craig was the one. We cannot say for sure who was the one. But three people definitely, and Craig was definitely from day one as part of the team, in my point of view. Looking at all, and he would be having substantial amount of BTC for sure. The Tulip Trust that they were established has substantial amount of money, BTC, for sure. And some of the coins moved from 2010, so that's the fact. Who has moved is some still a mystery. So if that mystery is an you know kind of known, then I think we'll have a better insight of what is really happening. So that's why I'm keeping my mind open. I'm totally accepted what UK code said, totally accepting what BSV price is saying. So I mean, it is good to have all three. Like BCH has also good price action. If you look at BCH, is also making progress. So you never know. That is also a good fork. I mean, BSV is also good fork, and it's a different thing. I think we can discuss sometime later when more people are interested. I can share my point of view. At this moment, I'll just limit to whatever I said so far. A very interesting topic. Anyways, I'll end here. We'll get together again next week. Bye for now.